Welcome back, amazing performance management students. Steve Willis here, like usual. In this video, I'm going to show you how to pass your performance management exam. We're going to look at activity-based costing in Section A. So look down below, find the questions, try them first, then continue watching the video. We're looking at a difficult activity-based costing question. When you see a big question like this with lots of information, it's really critical that we read the requirement first. What are we looking for? Activity-based costing. And what are we going to do with activity-based costing? The total fixed overheads, right? There's no direct costs mixed into that. Absorbed into each unit of B, not the total for B, each B. Okay. First step, cost pools. Second step, cost drivers. Read the story. Can you find the cost pools and the cost drivers? Pause the video if you need to. Well, sure we can. We learn that there are fixed costs related to material handling and general. And the material handling are 100,000. The general are 180,000. So we've got to assign those overheads to each product B. So we can do we've got material handling, we've got general fixed costs, we've got 100,000 here, 180,000 here. Okay, now we need drivers. And you found that. Cost driver for the fixed costs for material handling is volume of material. General are absorbed on labor hours. Okay. Now there's a little bit of a problem here. They don't give us units. They only give us the amount. Okay. The total, the cost per unit. They don't give us the rate. But that's not a problem because there's an important statement here. The products use the same type of materials and skilled workers. So the ratio of cost assigned to products will be constant whether we are looking at the amount of material or the cost of material. Guys, so what we're going to do is put a little total column here next to each of these. And if we can get the total spend of materials and labor for each product, that tells us the ratio of the material and labor that get assigned, and then we can work out the cost per unit. So the total cost for direct materials will be 10,000. Total cost for materials for B will be 40,000, right? That's the 10 times the 1, 20 times 2. Labor, 5 times 1, 5,000. 20 times 2, 40,000. There we go. Now, if we can get a grand total over here, what is the total labor and material for both products? That would be 10 plus 40 is 50. 5 plus 40 is 45. Now, we can assign the overheads to product B based on the ratio of consumption. So that would be 40 over 45 for product B, 40 over 50 for product for materials, and 40 over 45 for labor. Okay, so that'll be 100 multiplied by 40 over 50, 180 multiplied by 40 over 45. So 100,000 multiplied by 40 over 50, well, that's going to be 80,000. And 180 multiplied by 40 over 45, that's going to be 160,000. The total of that is 240,000. That's the total for the product, but we need to do it at the unit level, and there are 2,000 of those, so we divide that by 2,000, guys, and what do we get? We get 120 as our answer. And guys, answer is B. This question is similar to the previous one. Make sure you can handle this question archetype, activity-based costing. So we know we need cost pools, we need cost drivers, we need to assign the cost pools to some product. In this case, it's product D, and it's not the whole product family, but it's per unit. So it's the same steps as the previous question. Please look in the question now. Can you find the cost pools and the cost drivers? Pause the video if you need to. Well, you found. This time it's 3. We've got production, we've got inspection, and we've got general. So we know we're going for those, and we can set those out on scratch paper or in the scratch pad. Production, inspection, other. Okay, and do we have any drivers? Well, absolutely we have drivers. Inspections, we'll go with inspection costs. Production runs will be setup costs. Every time we do a production run, we've got to stop, we've got to change out the blades, recalibrate the equipment. So those are the costs related to a production run, setting things up. Lastly, other overheads are absorbed on labor hours. Okay, now this question's a bit different in that they give us not the dollar amount, but they give us the actual drivers, the quantity of drivers. So product C, inspections, right? It takes 5 inspections, 3 for D. So the total inspections to make all of those products is 8. Production runs 13, 15. 13 and 15 is 28. Now, if you're in a rush, you'll get this question wrong. You see an 8 and you see a 10. But check this out. This is actually a unit level, not a total for the product family. So we got to do one thing. We've got to get the total for each product. So 8 times 1 is 8,000. 10 times 4 is 40,000. 8 plus 40 is now 48. With that information, we can get busy. Okay? So production runs are based on the, the setup costs are based on production runs. And we're doing product D, so that would be times 15 over 28, right? The ratio 15 over 28. Inspections, that's 3 over 8. Other overheads, well, that's going to be 40 over 48. Let's do the math, and we get 75,000 for the production costs, for the production setup costs. Okay, we get 30,000 for the inspection costs, and we get 80,000 for the other overheads. And let's not forget this, we're making 4,000. We're making 4,000 Ds right here at the top, right? 4,000 Ds. So we got to total that up and divide by 4,000. That's 185,000. We divide that again by 4,000 units. And that will be our answer, 46.25. There we go. Everybody, the answer is B. This next question is an example of an easier question. It's a theoretical question. There's only 3 lines of information to process. It's our classic which of the statements is true or are true. It's all about activity-based costing. Well, a cost driver is a factor which causes a change in the cost of an activity. That's a core principle in ABC. Cost drivers, okay, create the costs. So we like statement 1. Traditional absorption costing, this is statement 2, tends to underestimate overhead costs for high volume products. What do they mean there? Let me show you what they mean. Imagine our overheads are $100. Imagine we make 2 products in our factory. We make product A, we make product B. Both products take the same labor hours, but there's also machining, there's also setup that happens, okay? But they take the same labor hours. And if we're going to do 10 units of A, 10 units of B, using absorption costing based on labor hours, we'd split those costs 50-50. But guys, imagine that we didn't do it that way. Imagine we made 1 A and we made 19 Bs. Okay? Now, using absorption costing based on labor hours, most of the overheads would go to B because of the single overhead absorption rate based on labor hours. However, under activity-based costing, we'd have other drivers. We would have potentially the setup costs or potentially engineering costs, which would then spread the costs between the 2 products more because there would be an economy of scale when we're doing the high volume products, guys. So 2 is false, okay? Traditional absorption costing will overestimate the overhead costs for the high volume products. So guys, statement 2 is false. It's 1 that is correct.